Eric Muathe, Muathe.com, with a quick follow-up on the last couple of videos where we've been talking about intraday timing. So this is the next day, and here we are taking a look at the Canadian market on the hourly, and we can see that as we begin the new month of September 2017, now we can see that the line we were drawing is coming in play. The market is already responding at the open here, so that taking that trade as we saw it towards yesterday mid-afternoon and into late trade, this was where one would have taken that intraday position on the short side. That's the hourly. Take a look at the 30-minute chart, and we can see again there was some expectation that this was forming a double top, and that seems to be taking place right there. So that was a good entry. We can see that right now. And if you take a look at the 5-minute chart, you can see that we had seen some type of negative divergence, and since then we can see that it has come off the highs here and is pulling back. So taking that trade when we saw that negative divergence was pretty much the best thing to have done, and now we can see already evidence of this starting to play out. Now, one thing I did not mention in the video, the last couple of videos on intraday timing, is I was also taking a look at other markets, and this is the FTSE hourly, and I did mention this to subscribers as of yesterday, that there was seems like they were coming back to test the top side of this hourly line as far as the FTSE is concerned. The last time we tagged that level, there was a pullback at these levels. Of course, we have a huge drop after that, a good swing trade, intraday trade, day trade situation, and now we can see that the FTSE is confirming the line we had seen as of yesterday. So I was also borrowing from other charts. Another chart I was borrowing from was the Dow hourly, where on the Dow hourly we've been noticing that the Dow is coming back to test this line. This was the previous support line that became a break line here of those highs, uniform activity rejection here of those highs there, and now we are coming back to test this line here. Looks like this would logically be where it stalls, especially now that we've seen the FTSE and the Canadian market also seem to be pulling back. So anybody trading the intraday in the US markets, this is a logical place to start looking for short opportunity intraday for a day trade type of a swing. Take a look at the 30-minute chart for the Dow, and even here we can notice that it is coming back to test this break line based on the uniformity method, if you draw it like that. So we are back here. We hit this level yesterday, we pulled back a little bit into the close, and now the huge question mark is on the 30-minute to 30-minute time frame. If we stall around here, this is going to be just like the Canadian market, where you'd want to take up a position for a swing trade, intraday trade, day trade to the downside. And keep in mind, just like we saw with the Canadian market, on the 5-minute chart for the Dow, we have an improvement as we open the first trading day for September 1st, 2017. And we can see here we are making what looks like negative divergence. So again, we can see that being also showing up on the 5-minute window, just like we saw for the Canadian market. So this is where you'd want to start building a position to the short side, excuse me, if there's going to be any potential for some type of an intraday move to the downside. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. Ashi. Mwah.